this is the most unloved gold bull market that I've ever seen. And, the fundamentals have never been better, yet the investors, they've been burned so many times waiting for a gold rally that hasn't happened. Now they're like, okay, it's like the boy who cried wolf. It doesn't matter how good the numbers look. I'm not buying it, right? So it's going to take a huge rally in the price of gold to get people bullish. Now, fortunately, we're going to get a huge rally in the price of gold, and it's coming really soon. Also, I think we're going to see a big drop in the dollar.
Gold and silver prices fell below unchanged levels near midday Friday, retreating from earlier sharp gains. The precious metals market is experiencing profit-taking by short-term futures traders and week-long liquidation as the weekend approaches, bringing uncertainty. This week's disappointing U.S. economic data, particularly the weaker-than-expected July jobs report, supported the initial surge in gold prices. Non-farm payrolls increased less than anticipated. The unemployment rate ticked, painting a picture of a softening labor market. PeterSchiff, CEO and chief global strategist of Euro-Pacific Capital and founder of SchiffGold, remains bullish on gold despite the day's pullback. Schiff argues that gold's fundamentals are stronger than ever, even as investors remain cautious due to past disappointments. He predicts a significant rally in gold prices is imminent and necessary to shift investor sentiment. Traditionally, bullion is viewed as a hedge against geopolitical and economic risks. The current low-interest rate environment reduces the opportunity cost of holding non-yielding assets like gold, making it more attractive to investors. Adding to the bullish outlook for precious metals is the increased safe haven demand amid heightened tensions in the Middle East. These factors combined suggest that gold prices could challenge record highs soon. Interestingly, Schiff notes that gold stocks experienced a drop today, even though some major companies had reached new 52-week highs earlier in the session. Rather than viewing this as a negative sign, Schiff sees it as a buying opportunity. Please tune in for our exploration of PeterSchiff's expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. We appreciate your support.
Now, gold did much better on the week, even though it was down today. I mean, at one point it was up, $24, $25. It looked like it was going to make another all-time record high. It was less than $10 away from a new all-time record high. And when it couldn't make a new all-time record high, it sold off. Now, I think that's temporary. I expect gold to hit a new all-time record high next week. We'll see if I'm right again, the way I was last week. But when gold turned around, and even though it was positive on the week, right, gold was up 2% on the week, and it was barely down today. It was only down a few dollars. I mean, it went up 20, down 20, and then it recovered, and it closed just slightly negative. So gold held up very, very well. But the gold stocks got clobbered today. Although earlier this morning, many of the big names that I own personally, that we own in the fund, Newmont Mining, Agnico Eagle Mining, Kinross, a few others, made new 52-week highs this morning. And then they ended up closing negative. I don't think these are significant or key reversals. I think you have a great opportunity to buy this dip into gold stocks. In fact, given how much the stock market was down, they held up. And in fact, the gold stocks were not down as much as the NASDAQ today. Normally, or it has been recently on these big down days when the NASDAQ gets killed, a lot of the gold stocks get killed even more. But the GDX was only down 2.2% on the day, and it still finished positive almost 1% on the week. So gold stocks are looking really good. I think they were a great buy today. In fact, I posted that on X that people should take advantage. We still don't have nearly enough bullishness on gold. It really is incredible. I looked at the earnings that came out a couple of days ago from Gold Money. I don't really have a position in the company anymore because I got rid of it to buy SchiffGold back. But I did look at the earnings because they came out with better than expected earnings. Stock was up about 10% from a really beaten down level. And I wanted to know, well, why? Why were the earnings good? Because, the gold business, I have SchiffGold. I mean, it was okay for us. And the reason they earned more money than people thought was because so many of their customers dumped their gold. They lost about 2% of the gold they had in custody. About $24 million worth of gold was sold by their customers, even though gold was up 4.5% on the quarter, which isn't bad. That annualizes out to 20%, yet their customers are selling their gold. Now, Gold Money makes a commission when they sell. So since there was a lot of selling, they made more commissions. But I mean, that's not what you really want to see. You want to see buying, because now you're getting new customers. They're sending more money. You get custody, storage fees. And when a customer buys, then that's the future sell commission that you can get. But when they sell, that doesn't guarantee a future buy because they take their money and they go someplace else. Now, it's possible some of the people that sold gold at gold money went and rebought it someplace else if they're just not satisfied with gold money. So it's hard to say for sure. But the fact that gold money isn't selling a lot of gold, the fact that SchiffGold isn't selling a lot of gold, the fact that nobody is selling a lot of gold just shows you how ridiculous this is. This is the most unloved gold bull market that I've ever seen. And, the fundamentals have never been better, yet the investors, they've been burned so many times waiting for a gold rally that hasn't happened. Now they're like, okay, it's like the boy who cried wolf. It doesn't matter how good the numbers look. I'm not buying it, right? So it's going to take a huge rally in the price of gold to get people bullish. Now, fortunately, we're going to get a huge rally in the price of gold, and it's coming really soon.
Recent economic data has intensified speculation about the Federal Reserve's next moves, with market participants increasingly betting on aggressive rate cuts shortly. This shift in sentiment follows comments from Fed Chair Jerome Powell on Wednesday, suggesting that rate cuts could begin as early as September if the U.S. economy progresses as anticipated. The latest jobs report, released Friday, has further bolstered these expectations. Government data revealed that employers added significantly fewer workers than expected last month, while the jobless rate increased. In response, interest rate futures contracts now indicate approximately a 70% probability of a substantial half percentage point cut in September, a marked shift from the previous expectation of a more modest quarter-point reduction. PeterSchiff takes an even more dramatic view of the situation. Schiff suggests that if market conditions continue to deteriorate, the Fed might be forced to implement an emergency intermediate rate cut. This perspective highlights the potential urgency of the economic challenges facing policymakers. However, Schiff doesn't shy away from criticizing the Fed's past decisions. He argues that the central bank should never have cut rates to zero in the first place, suggesting that these past actions have contributed to the current economic predicament. Let's get back to the interview.
We had a week of weak economic data capped off by an even a weaker jobs report. And now there's a lot of pressure on the Fed. Now a lot of people are talking about a 50 basis point rate cut in September. I was talking about it last week, and I thought they would do it potentially in July in the meeting we just had. I think they may end up having to do an emergency intra-meeting cut of 50 basis points, which they'll look like complete fools if they have to do that. So believe me, they don't want to. They want to wait until September, but they may not be able to if the markets keep tanking, right? So they're going to have to do something, but they're going to have to, try to find a way to sugarcoat it. But, they should have moved when I said, not because it was the right thing to do, but given that I know what they're trying to accomplish, they should have done it. They would have had, silenced some of their critics in the short run who don't really know enough to criticize them for the right thing anyway. Everybody thinks, oh, the Fed waited too long to cut. No, they waited too long to hike. In fact, they never should have cut. They never should have put rates at zero, but they did. And now they're in a very difficult situation. Oh, and one more thing before I get to the Fed meeting on the jobs report that I meant to mention was on the birth-death model. Now, as I said, the government claimed that 114,000 jobs in total were created in July. But that also includes the assumed jobs from the birth-death model. Right now, there's some debate as to exactly what one assumed job actually equals when it gets into the real numbers. I don't know that it's one for one. I'm not really sure. But I know it has a significant impact. Obviously, if they assume a lot of jobs were created, well, the number of jobs that they assumed were created by businesses that they guess were started up, right? They don't even know that these businesses exist. They're assuming that they were created. That birth-death model was 256,000 jobs created. That's a huge number relative to the total number that they claim were created. Does it make any sense that if the businesses that already exist are barely hiring anybody or are laying people off, that you'd have all these new companies starting up in the same month, hiring all these people? Makes no sense at all. Again, they still think, the statisticians, they all think the economy is great. And so they assume that new businesses started up. If they actually realized how weak the economy was, they would assume that existing businesses are closing down. And so the birth-death model would be showing jobs or businesses dying, not being born. So these numbers are way, way off.
The coming weeks leading up to the September FOMC meeting will likely be characterized by heightened volatility and intense speculation, as market participants attempt to anticipate the Fed's next move in an increasingly uncertain economic environment. Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.